Good evening, everyone. Hopefully, everyone can see me. Hopefully, everyone can hear me. And hopefully, you can see my screen. So, from my side, everything looks good. So, nothing's in the way of half an hour, 45 minutes. We'll see how active chat is today, speaking about real estate in Germany. One of the major topics for you expats. We've done seminars offline before Corona for 2 or 3 years now. And what we figured is what we found out is taxes is a big issue, pensions is a big issue, health insurance is a really big, one of the biggest issues, and real estate. And you have other questions than Germans have, just because you have to adjust to our culture, how everything works here. So, okay, I can see in chat everything sounds and looks good. Perfect. Thank you very much. Let's see. Let's talk a little bit about the prices. Everyone knows prices have increased a lot, but still many people like it because it could offer a nice return while there's nothing on a bank, 0% interest rate. Let's see if it makes sense. We also have the first question, is it a good time to invest in real estate? Well, let's have a look. Let's answer exactly that question. Nuru Saman paid actor today. So let's see. Before we start, one thing. This is only education and entertainment today. Please do not make any financial decisions based on what you hear. If you do, don't sue us. So aside from the question we got from Nuruzam, for inspiration, out of the 2-3 years that we did the seminar offline here in Munich, a couple of questions for you that we will answer, and maybe you have some different ones. So I don't really care how we structure this webinar. It's all about you. You should, at the end of the day, there should be no questions unanswered. So question 1, is it worth it? Question 2, we will dive into this like a little bit today, the difference between a home where you live in yourself and buying real estate as an investment. From a financial perspective, this is very different. If you are interested in the details, there's a video on our YouTube channel that dives into the comparison. And that goes much more into detail than we will do today. And then if you like it, well, how do you start? And how much can you afford? This is a very big question. We won't find the answer today because this depends on a lot of factors, but we will come very close so that you know what to search for. Very common, the best is always, there we definitely will not find an answer because best is thrown around a lot, and the question is, what does best even mean? And I can assure you, there's no general best for everyone. It depends on your situation, what you would consider the best. And what if you leave Germany again? Obviously, if you buy real estate, you can't take it with you. It will stay here. What are you gonna do? Some economists in the US speculate a real estate bubble in 2021. All right, the bubble. So these are the 3 questions that we will answer today. I kind of summarized all the questions that we got over the years into this to get our agenda. And the bubble is exactly this. This is the number 1 question that everyone has. I knew that it would be coming. Is it a bubble? Not just because of the some economists in the US. Not just 2021. We're having this discussion now for many years. And the follow-up question is always, is it gonna burst? And I know there has been this real estate report by the big bank UBS like a couple of weeks ago, saying that like Frankfurt and Hamburg and Munich are like have like the biggest bubble risk in whole Europe. Now I haven't read the report, but I have a very specific answer to the, let's say, the allegations that they've thrown around. So looking strategically, the prices have increased like a lot. And there's two reasons why they did. First one is you can see here the interest rate that we took. So let's say in the 1980s, we had like 12% interest rate. We still had the Deutschmark, but still 12% interest rate. And over time, it's a continual decrease. And now, because of the pandemic, our central bank decreased interest rates even further. And we will probably have this low interest rate for the foreseeable future. So this trend made the following. It just made real estate more affordable. Because a loan at 12% is just much more expensive than a loan at 1% interest rate. And because it became so affordable, a lot more people could jump in. Now, good news on this side, one thing that would say it's a bubble is if we had a credit bubble inside. So if people like 2008, 2009 in the US, we all know with the bankruptcy of Lehman Brothers, the global financial crisis started because we had a credit bubble. People were just taking too much debt. As of right now, we don't have a credit bubble. Still, everyone, as a society as a whole, we're still pretty responsible with how much credit we take. So this is reason one. And here we kind of see, I think the pinnacle is reached. Like, interest rates are almost zero. When I finance and people have a very good financial situation and they buy something within their means, sometimes we have like 0.6% interest rate they have to pay to the bank. That's like almost zero. So how far can it go? As of right now, nobody can think of that we will have negative interest rate when financing real estate. So this is probably where we're at the pinnacle. But then the second factor is our demand for property, especially if in the cities. I mean, look at this blue dot, this huge blue dot in the top right of the map, Berlin. Everyone wants to go in the cities. Look at the blue dot right below where I am in Munich. Everyone just wants to go there. So more and more people want to go into the city and people need more space. So there's also calculations since the 1960s, the personal space everyone has doubled. So when back in the day we had 20 square meter apartments per person, today it would be 40 square meters per person. So even without population growth, which we have thanks to your expats, so there's more and more people coming to Germany. Even if we wouldn't want everyone to live in the cities, we would still have a huge demand for property, and the pandemic made it even worse because it slowed down our building process. And this will continue. If we wanted that this stops, then the mortgage interest has kind of reached its pinnacle, but this demand for properties will continue to rise. And this is where I'm saying, okay, maybe we are on the way to a bubble. I don't know. A bubble always is just, you only see it like afterwards. But even if, it's like very, very small because we still have this demand for properties. If this goes away, okay, then the tides change. But as of right now, I'm saying it's a very, very good time to buy affordable real estate that will probably continue to rise. Not that fast as we've seen. We've seen in some cities 20%, 30% per year. This is super unrealistic, but still. All right, let's see. Let's have a look at chat. How much money for a start? We will see. We have this question. Scott, hi Scott, what's happening? Are costs for buying property worse for buyers than sellers? We will also have a change in law next year. I'm not sure about the details, but this will change the property fees you have between the seller and the buyer. This is number one. And number two, if you buy a real estate investment, all these costs that you have, notary, ground book, real estate agent, they're all tax deductible. So I know it hurts because it's about 10% of the apartment or of the property value you have to pay in fees, but at least for investors, they're tax deductible. For homeowners, they're not. So leverage might be cheap, but the fees unfortunately go up with the rising prices too. Yeah, so and sometimes you can't do anything about the fees. Like the ground tax is just in Berlin, it's just super high. Here in Bavaria, it's super cheap. But there's ways to keep the fees as low as possible. Could the demand for properties decrease due to the falling fertility rates in the long run? Very good thinking, very good question also. As it looks right now, we have a very low birth rate in Germany, and this for decades now. But we still have a net increase because of migration. So because of you guys, more and more people are coming to Germany. So as of right now, people in Germany are growing. What if you live in the property at first and then rent it out? Can you deduct the fees from taxes? Unfortunately not. If you want to be the most like tax efficient and the most money efficient, do it the other way around. Buy something as an investment, then deduct all the purchasing costs from your taxes, rent it out with a fixed term contract, like 1 year or 2 years or something. And after this time frame, you move in yourself. And then you deducted all the purchasing costs. This is a little trick that will save you thousands of euros. Yeah, tax deductions. What is your opinion on Erbbaurecht property? Erbbaurecht property. So for everyone who doesn't know, we also have a video about this on YouTube. It's basically when you buy regularly, you buy ground and you buy the property, or you build the property yourself. But with Erbbaurecht, it detaches the ground from the property. So you're basically leasing the ground from somebody else. And I think, so why is this very common? People can buy super cheap real estate with this. I'm not a big fan. If this leasing contract ends, you have your house built on somebody else's property. And at the end of the day, they can say, get out of my property. And so there's room for negotiations, but at the end of the day, if they don't agree to anything, then they get your house for free because it's their ground. This would be the absolute worst case. So rather save more, yeah, 2/3 of the market price, exactly. But if they don't agree, in theory, they get it for free. So I'm not a fan at all of Erbbaurecht. So what can we buy? And here, I'm not gonna do any product pitching here. It's just about strategy, because strategy is always more important than the product at the end of the day. So I'm not gonna tell you how to get something here, but strategically, what are the different types of property that you can buy in Germany, either for yourself as a home or as investment. In Berlin, properties that are already rented appear 20 to 30% cheaper than unvermietet. Is that catch around the difficulty in removing tenants? Well, Berlin is a little special right now because you have the rent cap for the next. If this is going through Congress, like our German Congress, you will have your rent cap for the next 5 years, I think it is. And properties that are already rented are cheaper, but it should be actually the other way around. So there's probably something with your rent cap, that's my estimation, and also difficulty in removing the tenants, yeah, for sure. If the tenant doesn't want to move out, you have to go through court. At the end of, if he really doesn't want to move out, the last resort is court, and this takes like at least 2 or 3 years, and a lot of money. A lot of money, and a lot of headache too. A lot of headache. If you've ever been involved in a German lawsuit, it's a lot of headache. So obviously, new building, right? Where something they built completely new. This is very common right now for a lot of property developers. Either they build something new, or where a building exists, they completely renovate it. If this happens and you buy for yourself, then you can bring in your own wishes. That's pretty nice. Now, a tip, if you buy as an investment, nobody cares about your own wishes. Just do like what the average person wants. Then it's the easiest to rent it out. And another nice trick to save a couple of €1,000. Maybe you heard of the KfW before. So KfW, it's like a German bank. I think at least partly owned by the state or owned by the state. I'm not sure. It doesn't matter as well. And if you build with the highest energy standard, if you build like energy efficient, if you build sustainable, you get super cheap credit. And also you get like 18,000 euros as subsidies for the bank to pay your principal off. And I'm currently calculating it because I'm preparing the next videos about real estate. And what I think you can do it, that if you have a really good financial situation and you buy the most energy efficient and you get the most subsidies possible, you can get a negative interest rate. But I'm not sure, I have to do the calculations in full, but very close to zero at least. Maybe even negative. Now the negative about this, there's no positive for everything, right? Everything has upsides and downsides. The negative is, until this is finished, this takes like 2 or 3 years at least. And if you don't have an architect or you don't buy something from these big property developers, if you want to build yourself, there's super high costs that nobody can calculate. Like if you build on your own, have at least a 10 to 20% safety margin. Never ever, working as a financial advisor, have I seen that people build something on their own, at the end of the day, they have the exact cost that somebody calculated. Never happened. Was always more. On the other side, you have buildings that are already existing. And usually you can buy them like very cheap. If they're not rented out, like Scott just said, you can move in like immediately. And the price is very predictable. And you buy what you see. The other thing, the new building, there's just pictures. There's just pictures on a piece of paper. But with the existing building, you can buy what you see. On the downside, There's some things that might need renovation soon. I've seen buildings where the whole community of owners already agreed that over the next 3 or 4 years there will be millions and millions of renovation costs across the whole house. And so be aware of that. Before you buy something that exists already, look at the owners' meetings they have and if they already agreed to renovations. And if you're not at the newest standard, there's no subsidies happening. You just buy straight out of your own pocket. Is Erbach apartment good for investment purposes? In my opinion, it's even worse for investment purposes than it is for self-use. Because it's cheaper. So getting a credit for an investment property is super easy. Then it's cheaper, then you have less purchasing costs, which you don't care about the purchasing costs because they're tax deductible anyway. Then you take less loan, so you also pay less interest, but you don't care about the interest because the interest payment you make is also tax deductible. So I think as investment, it's no good. And properties in foreclosure, I mean, if you can make a good deal, good for you, but usually they pay way more than market price. If you've never been to a foreclosure, go there, take a bag of popcorn. It's really fun. It's really fun. People get super heated there. So historical buildings, for everyone watching who has like a really high income, let's say like at least 6 digits, and who doesn't like to pay taxes, this might be your way to save a lot in taxes. So historical buildings are like the really old buildings that we have in like the top prime locations that usually need to be renovated like a lot. In a very difficult process also because the state is involved. But because of this, because they're like they depreciate way more than regular buildings, so they're way more tax efficient. And so if you have a high income, this might be for you. This saves you a lot of taxes. But you really need a high income, like easily 6 digits per person. So if you're married, you need like 200K. And this is something the person who had a call with me earlier this afternoon. You know exactly who I'm talking to. This was something that we spoke about, like these concept buildings. They're small units, so you don't need a lot of money. The income you get from this is very secure because you have long contracts with the tenants or with the company that manages it. Usually they offer also a rent pool so that the rent, the whole building's generated, gets pooled. So your risk of being without a rent is actually super low. These are the positive. The negative is though that if the whole surrounding changes, if the whole infrastructure around this concept building changes, so let's say you buy student apartments and the university is not good anymore, not a lot of students want to come, then we don't know what's going to happen with a lot of student apartments when they're all empty. Will it be difficult to get loan for second apartment or house for living purpose if I already owned one as an investment or the other way around? Completely no. So in general, no. Depends on your financial situation. How much are you paying? How much are you making? How much is your current loan that you have? How much is left after your net income and you paid all your expenses for all your life? And what do you want to buy? How much is this that you want to buy? So in general, it's all possible. Sometimes it can also help. So like at some point it flips when you have like 1, 2, 3 or more apartments already. that are decently paid off, then it flips and it gets all easier to buy new ones. How can we save taxes with Denkmalschutz? Denkmalschutz is, first of all, it depreciates more. So a regular building, every of these other three categories depreciates, so loses value from a tax perspective. Like book value, I know it's not going to happen in real life that it loses value, but from a book perspective, loses 2%. So after 50 years of not maintaining the building, in theory, from a tax perspective, it's worth 0. And historical buildings depreciate up to 8%, so 4 times as fast. This is one of the major ways to save taxes. Now, question was also from somebody earlier, how to start, or like, how much can I afford? Very popular question. Answer, unfortunately, is not that easy, but we will come like as close as it gets here. So here's how to approach this. Sum up all the equity that you have. The more money you have already, the better it is, the better interest rate you will get, the more creditworthy you are to a bank, and the more you can afford. Then calculate what I just said, your free liquidity. So how much net income do you have in the whole household? And then how much are you paying for all your life? And see the difference. And not just how much it is today, but also in the future. So if you're a couple right now watching and your free liquidity is, I don't know, 1,000 euros, good for you. But if you want to have a child next year, then you won't have 1,000 euros in free liquidity anymore. It's going to be like half or something. I don't know what kids cost, but it's not a sustainable 1,000 euros. And these two, in combination with the specific property you want to buy, this determines your interest rate and how much loan you can get from a bank. I make you an example. Just because you are willing to pay 100,000 for a property doesn't mean that all banks are also valuing this property at 100,000. Some banks might just value this at 80,000 because that's just what they come up with their evaluation. And that means they're not going to give you 100,000, they only give you maximum 80,000. So saying what kind of interest rates you could get, it's not going to be legit without having a specific property and a specific bank. Nobody ever can guarantee you an interest rate of whatever. It always depends. And lastly, have a little bit of safety margin. We probably all know this sentence, house rich, cash poor. Well, if this happens and you're forced to sell again because you don't have a safety margin, that's pretty bad. So don't go to the maximum. Is there a way to avoid capital gains tax if selling before the 10-year period? So what Fadi is referring to is if you buy a real estate investment in Germany and you hold it for 10 years, the sell is tax-free. Is there a way to avoid it? Yes, just move in yourself. And then I think it's 1 year or maybe more or something. I'm not sure about the time frame, but it's definitely not 10 years. It's way less. How is Grunderwerbsteuer calculated? Is it calculated differently for all of the 4 options you described? Grunderwerbsteuer is state law by us. So it ranges between 3 and 6.5% on something depending on the state. So in Bavaria it's always 3%, it doesn't matter what you buy. In Berlin it's 6, I think, or 6.5. Does investment assets also count? For example, open investments in stocks. Well, if you want to have investments in stocks, Usually banks value this between 30 and 50% of the actual account value, depends which bank you're speaking to. If you have these stocks in a pension contract or in another savings contract that has like securities and guarantees, then banks value this way better. So if you want to know and go into detail on this, on Friday there's like our pension video released, and I also go into detail there, like how can you connect pensions to real estate. It's really good to use synergies between these two products. Maybe someone asked about tax saving as a real estate investor. If not, please explain a bit that. Is there any tax saving as an investor? I heard we need to give 25% on rental income. So the tax situation, Umair, the tax situation is different for purchasing and for holding the property. So with purchasing, all the additional purchasing costs that you have, notary, taxes, agent maybe, they're all tax deductible as an investor. And rental, these are the one-time purchasing costs. And the ongoing holding tax situation is, as an investor, your interest rate is tax deductible that you pay to the bank. Depreciation is tax deductible, so the book loss of value from a tax perspective, and renovations and everything, and the management company if you have it. These are all tax deductible, and your rental income is taxed like work, so up to 42%. So out of all of this, we have a lot of people who say, well, this is a lot of work, buying a property in Germany. And I agree, we can help and we can make like the work as little as possible, but it's still a lot of work and a lot of paperwork. So a really, really nice way to make this much more easier and to start with little money and not that long of a commitment is buying real estate on paper. And I'm very, very happy that there's one company in Germany that does this kind of real estate on paper, and I'm very, very happy that we are working with them now for a little more than a year. So if you want to invest in real estate without all the effort, without the agent, without the bank, without the notary, etc., this might be a way to go, and this might also be a way to save up equity for you. And they generally have two different, so they have multiple options how you can go forward, but they basically split in two. So one thing is the diversified approach, where they're just they're pooling money from investors, it works like a fund, and they're buying real estate all over the world. So your risk of losing money is actually close to zero, because what does a haven in Canada has to do with a nursing home in Germany or a residential real estate in Japan? These are like not connected. And their strategy that they're having, they're buying shitty properties in very good locations, renovating it, increasing the value therefore, and selling it expensive again. And this is a strategy that holds true for them for decades now, works very, very well. On average, they make back 2.7 times of what they put into the properties. Insane return. And with their latest funds, they also introduced a monthly savings plan. So you don't have to come up with like 25,000 euros anymore, which you had back in the day. Now you can build up gradually month by month. Like if anyone's from India watching, you have these systematic investment plans or like a savings plan into a broker or whatever. You can also invest in this. And they also have this focused approach, and their latest thing that you can join is, maybe you know this, this is the big red office tower in Chicago in the USA. And I'm very, very happy that some of our clients got to join this. This was a building that they just bought this building with Corona discount because the current owner couldn't pay the bank credit anymore. And in this specific one, they're distributing the rental income. They project to sell it again in like, I think 5 to 10 years or something, I'm not sure, but they project to sell it again. They will do some little renovations and sell it again after Corona recovers, or the economy recovers from Corona. And just as an example, when you would invest 25,000 into this, you buy a share of the big red. The rental income that they distribute would be over time 10,000 euros. And when they sell it again for 1 times 8, what they bought it for would be 45,000. So out of 25 invested, you would get back as a projection 55k. That's like over time, that's like an easy 10% interest rate. So if you're thinking, real estate is very exciting from an investment perspective, but I don't want to go through all of the hassle, maybe real estate on paper is more for you. Will you discuss also commercial real estate properties? Let me write this on my list. I'm currently preparing the YouTube series. Commercial real estate. There will be a video series on our YouTube channel by the end of this year, so starting in November probably, and I'll make a separate video out of this. Is this the same as a REIT? It's very similar to a REIT. A REIT, Real Estate Investment Trust, has tax benefits though, and this one works like a real estate partnership, so they pool money for a specific amount of time, which makes it more efficient because they don't have to hold cash. Like in a real estate, you can buy and real estate investment trust, you can buy and sell at any time, meaning they have to hold cash, which makes it a little inefficient. Very similar to property ETFs. Wait, I need electricity or the stream will shut off soon. Very similar to property ETFs. And return is guaranteed, nothing's guaranteed. I hate to break it to you, Holy High, but nothing's guaranteed. Only a bank account with 0% interest rate. That's the official answer. The unofficial answer is, if you go with the left side with this, like the diversified approach, and buy a lot of real estate all over the world, that everything will be worth 0 is like super unlikely. But nothing's guaranteed. Do you need to be an accredited investor for some of the project? And that's exactly the beauty about it, Fadi. You don't have to be anymore. You had to be in the past, but not anymore. They made it accessible for everyday investors. Of course, there are certain rules, so you can't put in all your money, that's for sure. Still, the state wants to protect you, and that's good. But everyone can join. I think the smallest you can go is like $50 per month or something. So, if you're thinking, okay, one last question. How flexible is real estate on paper? In terms of if we want to take out money from it, to be honest, it's possible, but you better not, to be honest. There's like a secondary market, but this money is meant to stay there for whatever years. So I think the shortest they have is like 4 years or something. And it's more worth it if you leave it there. So maybe buy a smaller chunk and leave it there, instead of going all out and then at the end of the day you have to take money out. Did you invest by yourself? Follow-up question from Umair. Umair, you have been in one of the seminars before, didn't you? I remember your name. Yeah, so 4 years. I think the shortest is 4 years. Then they have like 10 years or something. So there's like yeah, exactly, the real estate Cologne. Yeah, this a lot of people watch this video actually on your question. Yeah, so there's multiple lengths. They don't just there's not just this one fund. They have multiple. Did you invest in yourself? Not that it matters for you, because what I do doesn't mean that it's right for you. But no, I didn't. I have currently other things to invest in, like in all of this. So no, I'm not currently investing in anything that's available to the public. But if I currently wouldn't be building my own company and everything, if I would be a regular employee, I probably would. I think this is very, very cool, especially the ones that distribute rental income, because you get passive income. And I myself, I really enjoy passive income. I really, really enjoy passive income. It's super cool. But that's just me. Maybe you don't like it, and that's cool as well. Then you do what you see fit with your money. Yay for passive income, exactly. So if you want passive income, like Scott or like me, here's how you do it. Because I believe everyone can buy a property within their means, of course. I mean, I can't buy like this house that I'm currently in, because it will be like tens of millions. So of course it has to be within your means. But if you want to buy a property, you can. And any property, they're all the same. It's all the same 3 steps. And if you do it professionally, you can. Here's how. Build equity. We have the at least 10% additional purchasing costs from buying something in Germany, and no bank ever, if you speak to Germans who bought 10 years ago or 5 years ago, maybe they will tell you the bank also financed the additional purchasing cost. Maybe true, but not anymore. Time's over. So if you don't have these 10% additional purchasing costs, you can't buy. So start by building equity. And while you do this, try to find an object. And when you have your financial situation sorted out and you have an object, then you can secure financing. Don't believe these banks or whoever who says, we will get you 0.5% interest rate. It doesn't work like this. That's not the professional way. Interest rate is always bound to a person and a property. And for all the clients that I work with who switched apartments or houses that they wanted to buy, they always have different interest rates. Even though they are the same, but the properties change, so they have different interest rates. And don't start with level 2, or don't start with step 3, because this is a seller's market right now, and all the properties that appear on the market that a lot of people want, the good properties, they're like gone quickly. So start with step 1 and then go across. And how do you do this? Well, you basically have 2 ways. You have 5 topics of personal finance, actually 6. The last one that's missing here is taxes, but there's hardly any planning involved with taxes. Taxes are just calculating what happened last year. And real estate is certainly one of them, but as a real estate salesman just will tell you real estate is the best, because this is the only thing that he can do without knowing if this is true or not. And this is the reason why I founded this company, to work in all fields of personal finance and to see on a goal-based advice what is actually the best for the customer. And maybe you like real estate, but it's not the best for you. It's not what you should go for. Or maybe it is. We'll see. So if you think that this is better than going on yourself on the internet or going to a real estate salesman, I am very happy to invite you to secure your free meeting with us. There's multiple people in chat that I remember from the name who I already spent time with. And at least as of right now, they all make a happy impression. And for some of them, we are going the way of purchasing now, or purchased already. So thank you everyone for watching today. We landed like right on time. We spent right around 45 minutes. I will leave this video online for a while. So if there's any questions, you can comment and I will sure that you will get an answer. If you're securing an appointment or sending us a text on WhatsApp, let me know that you watched this webinar, and you will get an appointment faster. I wish every one of you a happy evening. You're very welcome, Scott. And for everyone, stay healthy. That is really important right now. Goodbye.